Hello everybody, Tortoise Investing. It's Monday, coming at you with another video. Hope everyone had a great weekend. We are now sitting at 174 subscribers. Thank you everybody for hit that red button. If you're new and haven't yet, please hit that like and subscribe button. I greatly appreciate it. Super free, super easy to do. Keeps on growing. And comment down below. Love communicating with you. If you have any questions or video recommendations, anything at all, I greatly appreciate it. Now, today's video. Today we're going to be going over 3 healthcare stocks and 1 ETF healthcare stock that I think would be great additions to any portfolio. Now, without further ado, so the first one, United Health Group. If you know me, then you know that I absolutely love this stock. Has a free cash flow yield of 5.15%. It's got more cash than debt on hand. Love to see it. Has dividend yield of 1.39% and a payout ratio below 30%. That is insane. It is down a good little bit this year. I think at one point this did hit $550. So right now is a great entry point, I feel, for it. None of this financial advice, just educational entertainment purposes. But I do like this stock. As you can see here, revenue, EBITDA, free cash flow, the net income, the EPS, everything is just ticking in the right direction. It has a high return on capital employed. You love to see it. And it has a fantastic dividend growth rate. It's been growing its dividend for over 13 years. And if you look at its growth rate here, over the 1 year, 14.29%. The 3-year average is 15.63%. And this is the definition of a dividend compounder. Love it, love it, love it. This is one of my favorites. I do think that if you're looking for a healthcare stock, can't go wrong with this. Can't go wrong with any of these, honestly. Next up, J&J. Oh, Johnson & Johnson. It's having a rough year. It's got those lawsuits it's trying to deal with. Again, another stock that has more cash on hand than debt. You love to see this. It has a free cash flow yield of 4.38%, has a dividend yield of 2.96%, a payout ratio of 66%. Usually I like to see this around 65% or lower, but you know what? It's J&J. It'll get a pass. This thing's been growing its dividend forever. Revenue, free cash flow, everything here, again, seems to be ticking in the right direction, although not as quickly as United Health. J&J is a pretty established company. It's been around for quite a while. So, yeah, dividend growth is there. And, again, return on capital employed above 15%. You love to see it. Now, the dividend stats. Here we go. Been growing its dividend for 61 years. Insane. Absolutely insane. You love to see it. Love to see it. And it's got a dividend growth rate over the past 1 year, 6.21%, 3 years, 5.87%, and the 5 year, 6.03%. So it is beating inflation on that front. Again, another great compounder. I really like J&J. I personally hold J&J, and I've been dollar cost averaging in my position since it's had the little dip here. Next up, kind of a little bit of a surprise. I didn't expect to see CVS this low. I like CVS at 90. I love CVS in the 80s. So with my portfolio, I was double dipping in a stock on accident because of my SCHD holding, and I moved that money into CVS. I got in around 82 and some change. But I think that this is going to be another great long-term hold. They got their financial sheet's not as good as the previous ones, but they are on track for getting things rolling. And again, they're down 11%. If you look at the revenue, the EBITDA has generally been ticking in the right direction. Free cash flow, net income. They've had the hiccup from 2022. Their debt is a little higher than what I would like. I like to have this at a ratio of 3. But if you look just a couple years ago, $17 billion. This is a stock that I do think is going to get back on track. They're going to get everything rolling again. Their free cash flow yield is 12.45%. That's very, very good. Dividend yield of 2.93% and a payout ratio of 70%. A little high, but again, this is something they're reconstructing a lot of things. They're trying to get their financial sheets back in order, and I think just at this price point it is too good, too good. They got a lower return on capital employed, but again, this is kind of a company that had some issues, and they're in the process of fixing things, and I believe in them. I believe CVS. I think CVS is a better overall company than Walgreens. I know Walgreens is another fan favorite when it comes to dividend stocks. If we take a look here at the dividend history, they did pause their dividend for a while, but ever since they stopped the pause, here is a 10% increase, and here is about another 10% increase. So the last two hikes have been 10% plus. You like to see it, and again, it's down a good bit. I could very easily see the stock being over $100 in the next 2 years. Just my personal opinion. I think that they're going to get things ticking and rolling again. Now, if individual stocks aren't your cup of tea and you want to just get an ETF and just set it and forget it, there is IYH, which is the iCore healthcare ETF. And as you can see here, over the last 3 years, it has pretty much been even with the S&P 500. It's down a little bit, but the 5-year, it's been beating it, and the 10-year, it has been beating it. And if over the last 10 years you can beat the S&P 500 by 20% almost, you have my attention. Now let's see, IYH. Let's go ahead and take a quick look. IYH at the holdings from it. ETF holdings. Probably should have already had this pulled up, but I didn't because I'm dumb. Nope, that's IYK. Nope, go back. Leaving it in. IYH. Sorry. Alrighty, ETF. Boop. And this holds a lot of great companies. A lot of names that you are going to absolutely recognize. Come on, internet. Okay, scroll down. Here we go. Yep, United Healthcare Group makes up 8.98%. Johnson & Johnson makes up a little over 8%. It's got AbbVie in there, Merck & Co., Eli Lilly, Pfizer, Thermo Fisher, Abbott, Diner, and Bristol Myers Squibb making up the top 10. These are big names. It makes up 52% of the portfolio. So the thing that I really like is definitely this top 5 here. This top 5 is so incredibly strong. And again, if you don't feel like going through picking out your individual healthcare stock and you just want to have the whole cake and eat it too, you can't go wrong. Cannot go wrong with IYH, because like I said, when you have this track record here of beating the S&P 500 over 10 years, you're doing something right. You are absolutely doing something right. But yeah, guys, that is everything for today. Just want to show off some quick healthcare stocks and that ETF that is market beating. And again, if you have any questions, wondering about anything, let me know down below. And until next time, see yous.